So here's the question. I'm so confused on taxes. Like, if I earn 47,000 ringgit per year, do I get taxed 6%? How does it work? Well, the short answer to it is no. You won't be taxed 6% on your entire amount. But that's because taxes in Malaysia are progressive. Now, this means that you will gradually pay more as your income increases. So let me give you an example. This is the latest tax table provided by LHDN. And your annual income is 47,000 ringgit per year. So your first 5,000 ringgit is actually tax-free, which is why you see a zero over here. And then your next 15,000 ringgit, you will incur a 1% tax, which is 150 ringgit, followed by your following 15,000 ringgit that increases to a 3% tax rate, which adds up to 450 ringgit. And finally, your remaining 12,000 ringgit will be subjected to a 6% tax. That adds up to 720 ringgit. You add up these four figures together and you will get your total taxes, which is 1,320 ringgit. So bear in mind, this calculation is without any tax reliefs. Now, let's assume that this year itself, you managed to get a juicy tax relief of 12,000 ringgit. All you need to do is deduct your gross income. So notice that the 12,000 ringgit here is completely tax-free. Okay, this is why maxing out your tax relief is a very good option, because you'll be able to deduct your total gross income and then you'll be able to fall to a lower tax bracket. And at the end of the day, save much more money. Okay, in this case itself, because you fall under the 35,000 ringgit tax bracket, you save actually 720 ringgit in taxes. And to add on to that, if your chargeable annual income does not exceed 35,000 ringgit, the government actually will give you a rebate of 400 ringgit. So in this case, the final tax that you're supposed to pay is 600 minus the 400 ringgit rebate. That's only 200 ringgit. Just a quick note over here, gross income, it's safe to include all sources of income, except those that are exempted from tax. The most notable one being interest earned from fixed deposits. Those you can completely omit when you file your taxes, as well as the dividends you earn from shares. Let's say you bought Maybank shares and you received their dividend. Yeah, that dividend is exempted from tax. But other than that, you should generally report all your sources of income. Okay, these include your basic salary. That's the first one. Next one is bonuses. Don't forget about that. Third one being, let's say you do any side hustles, any side jobs, okay, you work as a waiter/waitress part-time, you earn an additional 500 ringgit per month. Yeah, that should actually go towards your total income. So with that out of the way, now let's move on over to PRS. Versa is allowing users to earn 12% per annum on Versa Cash if you deposit 3,000 ringgit into their PRS between 1st to 28th of December. To encourage you to invest in PRS, they also show you how much savings you will incur. So let's say after you calculate your chargeable income already, you factor in your 3,000 ringgit that you put in Versa PRS, here's how much you will save. Okay, your output, let's say your tax bracket is 3%, you will save 90 ringgit from your contribution to PRS to Versa, right? And that's equivalent to 45 nasi lemak. But here's the dark side, right? So benefits aside, here's the dark side. We must actually understand what PRS is. Okay, for those who are new, PRS stands for Private Retirement Scheme. It's in a way pretty similar to EPF, but there are also a bit of differences. Well, first of all, the contribution to PRS is entirely voluntary, but EPF is mandatory for employees and employers, and at the same time, you can also contribute to EPF voluntarily, right? The second one, there are no guaranteed returns in PRS. Whereas EPF, they are by law required to guarantee a minimum return of 2.5% per year. And fortunately, in the past 10 to 14 years, they've managed to net a return of 6% annually. But in the case of PRS, right, if these funds underperform, and some years they can actually have a negative performance, you will actually lose money. So the next one is tax relief, 3,000 ringgit. Okay, that one we talked about it already. EPF, the initial 4,000 ringgit tax relief, the majority of you is guaranteed to get it already, as long as you are above the minimum wage. And on top of this initial 4K tax relief, there is an additional 3,000 ringgit relief for voluntary contributions. So it makes a lot of sense to voluntarily contribute to EPF right now. Now, withdrawal age, both also 55. but there is a sales charge up to 3%, annual management fees up to 5%. So if you're investing in PRS, you want to make sure you check all those fees, because at the end of the day, they will eat into your profits. Okay, whereas ETF, there is nothing at all. There's no upfront costs, there is no management fees, you get what you see. In the case of versus PRS, right, those benefits aside that I mentioned just now, it can seem like a good decision to invest in it just for the tax relief. But you must understand that versus PRS, the funds, they perform mediocre at best. The 10-year annualized return is 2.8% only. So this is barely keeping up with inflation. And we're not even talking about fees yet. There's no sales fee, which is one of the selling points that they always tell you. But there is a management fee of 1.3%. There is a trustee fee of 0.04%. There is the annual PPA fee, which if you make contributions, then this will apply. So at the end of the day, you got to weigh your pros and cons over here. Definitely maxing out your tax relief is a good option. But if you want to contribute more than that, and you're looking at the history of PRS performance, and some years they perform at a negative rate, right? Then it may actually make more sense to also max out your ETF, right? So personally, in my opinion, what I will do first is to max out my voluntary contribution to EPF. Then if I'm looking for more tax release, I will contribute to PRS a maximum 3,000 ringgit.